and welcome to Moneylife. This is Sucheta Dalal. Today we are on to a different topic. We are going to talk about ghost loans, which many of us have been finding in our credit reports. Now, all of you know what is a credit report. If you are a borrower, then all your data goes to credit information companies, also called as credit bureaus, which collate the data into a report, and that report decides whether you're going to get a lower interest rate or you pay a higher interest rate, and if you're a defaulter, you don't get a loan. Okay? People are discovering when they look at their credit reports that there are loans that they have never taken, ghost loans or fake loans, which are showing up in their credit report. Now, this, as you know, has serious consequences. I've just explained what happens. Many people have gone and looked at the credit report because suddenly they found when they went to borrow, they wanted a car loan or personal loan, and they found that their credit score, which is a number, a 3-digit number that the credit information companies put together based on your standing. So if you're a good borrower and you're repaying regularly, it's 800 plus or it plummets. Now, they discovered that their credit score had suddenly dropped, and hello, there are ghost loans in their credit report, money that they had never taken, and they don't know who had borrowed it. A lot of people discovered this happening with Dhani loans and services. So their credit report would show up that they have a borrowing from Dhani when they had never even approached them, they know about it, and there was a huge noise on social media. There were many articles written, Moneylife has written about it. Moneylife Foundation, which is a non-for-profit organization, along with others, even took this issue up with the Reserve Bank of India. The RBI, which is a regulator, promised to initiate quick action, but it has probably been stopped in its tracks by the discovery that Dhani, which used to be an Indiabulls company, is not alone. In fact, this seems to be a larger systemic issue, which emanates from the fact that fintech companies, think all those unicorns with $1 billion valuation, these fintech companies want to onboard people super fast, do it all online, finish know your customer formalities mandated by the RBI in a matter of minutes, and dump a loan sanctioned and disbursed into your phone or your bank account. In the process, they're obviously taking shortcuts on KYC, and they have probably been getting away with it because everybody loves a good process. So when the going is good, the loan is fast, nobody complains. But when there is a problem, like the fraudsters get in, they realize that the system can be gamed and you can use somebody else's good credit and credit data to get yourself a loan, then things blow up, as happened with the ghost loans. There's big noise, there is reputational damage. For instance, Dhani talked to us and they said they have stopped one of the processes that probably leads to this. Now let me explain what I mean, and before that let me tell you the victims range from not just you and me, a senior business journalist, and one of our most searched celebrities, Sunny Leone. In fact, the Ken has written a detailed piece about it, and 3 things happen. The quantum of fake loans could be really small, could be 1,000 rupees, could be well over 1 lakh. I mean, many extremes. It's not much more than 1 lakh because, you know, when online processes, the loans are not that huge, but it's big. Depending on the repayment record of this ghost borrower, the consequences to the victim are, like I said before, sharp fall in your credit score if you have a ghost loan, you having to pay a higher interest rate on your future borrowing, whether it's a personal loan or a car loan or whatever, and your credit limits itself. So maybe you're entitled to a platinum card, you're not going to get it because you have all these small loans which you delay paying. So the impact is on you. For instance, Sunny Leone, the celebrity, had a paltry 2,000 rupees showing up, but it affected her credit score to the extent of 20%. Ken also writes that only her PAN was misused, as in her genuine PAN was used by a fraudster who then changed all the other data like the address, the phone number, the email ID, date of birth, so that, and of course bank account details, so that the money using her PAN and her credit score went into his or her account, whoever this fraudster is. This, in fact, shows a shocking lack of checks in the KYC process. But as I said, everybody is doing it. Systemic issue. Now, what does the RBI require? RBI needs you to submit photographs, it needs proof of identity, and it needs proof of address. This can be your PAN card, voter ID, Aadhaar number, a Narega card, driving license, multiple IDs. There is a fairly verified, good video-based real-time verification process which we as NGOs have been pushing for. It's expensive, people don't want to use it. Even the Aadhaar and PAN has to be pinged to respective government databases to verify. Everything costs money because each of these verifications, UIDAI also requires borrowers to pay. Now, like we said, we have talked to RBI and said, why don't you use a government website called the Central Registry of Securitization, Asset Reconstruction and Security Interest of India. Too long. Remember CERSAI. CERSAI does video e-verification, which has been mandated by the insurance regulator, pension regulator, and the capital market regulator. RBI, for some reason, doesn't want to do it, doesn't want to make this mandatory, and won't tell us why. Now, when we spoke to Gagan Banga, an independent director on Dhani, since he wanted to point out all the corrective steps that they had taken, he said there are two kinds of KYC. One is the Aadhaar-based verification, which by and large, though there are Aadhaar frauds, is by and large safe. Okay. Then there is a OTP sent to the mobile number, which is a double check. The second method allows borrowers to upload an alternative identity proof, maybe because their Aadhaar is not linked to their mobile number. This is where the mischief happens because some of these IDs can be morphed. And Dhani, for one, has said that it has stopped the second process and initiated a cleanup. We ourselves in Moneylife Foundation have sent dozens of complaints and all of them have been resolved in record time. But what about the others? Like I said, it's a systemic issue. In fact, a study that was done by one of these organizations on the onboarding process adopted by others shows that almost everyone, whether it's a Slice card, Money Tap, Cash E, or Credit B, all use the exact same processes as Dhani, which means that their customers or any of us could have loans showing up from these people. Bajaj Finserv, large lender, apparently requires only a PAN card for the Bajaj EMI. Now, ghost loans create panic, and this could have been avoided by better identity checks. Now, why do these checks not happen? Listen to what L. Srikanth, founder of Cashless Consumer, says. Cashless Consumer is an advocacy organization comprising techies which looks at all these loopholes in technology and works at making it safer for us. So he says many app-based lenders are cutting costs by procuring data from profilers. Who are profilers? They aggregate data by scraping it off various websites. These include things like bill pay, which you use for utilities. So you put correct data and whatever is available in the public domain is scraped, and it is also matched with social media data, and they create risk profiles and risk scores. This bypasses official credit information systems which are under direct regulation of the RBI. There are 4 credit information bureaus. Most of you have only heard of CIBIL. Now, because of ghost loans and the fact that smaller borrowers are looking at others, you may have heard of Experian, Equifax, and CRIF Highmark. So there are 4 of them. All are international companies. All are regulated by the RBI, but they want to avoid these and look at risk scores because it is cheaper. And since they look at social media and other data which the credit information companies don't look at, this data is obviously very helpful for recovery agents, and it's used with impunity. Now, the second bigger problem is the quality of data available in India. As we know, it all goes to the lowest bidder. So the last entry point where people are sitting and doing data entry is so poor that all of us have seen mistakes in our PAN card, Aadhaar, passports, driver's license, what have you. In fact, with me, the voter ID had spelling mistakes. So I spent 3 months getting it corrected, and there was another mistake in the corrected ID. So new mistakes were put in when the old ones were corrected, and this happens all the time. We Indians spell our names differently. Some states have the father's name as the middle name, others don't. Some have husband's name. There is complete confusion about how names are listed or what is our understanding of a middle name, which is completely different from the rest of the world. Now, what this does is it prevents a perfect verification across multiple identities. So even if the RBI had mandated multiple checks, it would just create more problems, because if you ask me for two identities, both regular, valid, legal, I may have some difference in both of them, and a machine and a computer doesn't recognize this and it would reject. So I would be harassed. It's not in our interests, obviously, unless the government undertakes a whole national data cleaning and matching mission. This is required. It's being done. People like Prithvi Haldia of Prime Database does it in Prime Database. So I would suggest that we have a Swachh Data Abhiyan, exactly like Swachh Bharat, because this is the need of the hour. But whether it can be done on lowest cost basis, we don't know. So what is the solution to all of this? Now, to my mind, it is control over our credit reports. We as individuals should have better control over our credit reports. Now, what do I mean by this? Given the complexity of the possible situation, I think the idea would be for credit information companies to use the credit card model. Now, before that, let me explain how it works. Credit information companies or credit bureaus who generate our reports are not able to make a single change. The lender gives the information, the credit information company just stores it. They use that data to create a credit score, which means that if there are any mistakes in it, if there is a dispute, then the lender has to okay it. This actually means that the system is completely stacked against us, because the process of making a correction is very tedious. You file a complaint about a wrong entry, you either do it with the lender or with the credit information company. It goes back to the lender has to okay it, and it could take as much as 30 days. Now, like I said, if the lender is cooperative, then it's 30 days. If not, it gets actually very harrowing. For instance, someone told me that he had a ghost loan. When he wrote to the lender actually asked him to get a no due certificate. I mean, how ridiculous is that? It's a ghost loan, a fake loan, and you're supposed to get a no due certificate. We also know that lenders act vindictive sometimes and threaten to wreck your credit report. This is a standard way of trying to extract payments. So all this has the system working against us, in addition to which there is poor grievance redressal because the RBI is not paying attention. The solution, like I said before, is very simple. Let's have a credit card model. So when a lender sends data to a CIC and it's going to be uploaded on your credit report, we should get an alert on our mobile saying, say Dhani app or Bajaj FinServe is reporting a loan of 2,000, 5,000, 10,000, whatever it is, on your credit report. If you have not taken this loan, here's a number to call and dispute it, or here's the email ID. This should go straight to the lender so that the lender can take immediate action, maybe to stop a fake loan if it's fake, or talk to you and confirm it, or get you to confirm it to the credit information company. This has two advantages. One, and the main one, is to the fintech companies themselves. They want to continue this process of onboarding quickly and dispersal of loans. That works for most people who want quick loans. So if the system is working well for 80% of the people, obviously they don't want newer checks, more mandates with all the flaws that I've described before. So they should be willing to pay for this. It can't be extracted from us. Remember, credit information companies do credit scores, keep credit reports deliberately obtuse because they want to extract money out of us. This should stop. You have our data, you're profiting from it. We need to get safety, redress, and some benefit out of it. The payment can come from fintech companies. RBI needs to get into it to ensure that the process is smooth, that credit information companies say, yes, there is a central data point from which SMSs go out. It's shared with all four. Remember, there are 4 credit information companies. Most of you know only about CIBIL. These days, some have got to know about Experian, Equifax, and CRIF Highmark, but it has to go to all 4 because all 4 maintain your credit records. They are international companies sanctioned by the RBI. The RBI should also discourage fintech companies from using any other profilers or anybody who's not in the system and who's onboarding using flimsy data without giving us as individuals a say in the matter. Now, why is this important and why should the RBI do it? Because there is another source of panic. Remember, fintech companies are constantly working to increase sales. And when they're increasing sales, they're finding different ways to do it. One of these is loans that are showing up in credit reports of people from things like Earth Digital, Clicks Capital, Simply Pay, Capital Fort, Karur Vaisya Bank, and others. Now, we're getting panic emails saying, I haven't taken a loan from them. We've then discovered that each of these are lenders who have a tie-up with large fintech marketplaces or food delivery companies like Amazon, Zomato, JioMart, and what have you. Now, all of them have begun to compete with each other to offer you EMI-based payments. So you can't pay for a television that you're buying or a refrigerator. It's instantly converted into an EMI and spread over 6 months. When you want to take that benefit, you so easily click on it because then you're paying just maybe 1/6 or 1/10 of the amount. They're offering you buy now, pay later schemes. All these schemes are actually hidden loans. And it is not the Amazons and the Zomatos who are giving you the money. They have at the back end one of these lenders that I mentioned earlier. Most people do not know all about this because the process is supposed to be smooth. You think you're dealing with Amazon, actually you're not. And the lenders are going to report you and it shows up on your credit information report. All of this is again non-transparent, opaque, you can't opt out of it, are some of the complaints that we get. So you opted for an EMI, maybe click something by mistake, you want to say, no, I'll pay it all. It is not possible. Again, this is what users tell me. I haven't tried it myself. So we need the RBI to step in. We need to say, you want the freedom to innovate, you want the freedom to grow business, make sure that you make it safe for consumers as well. That is all of us. We may be a small percentage, maybe 90% of it works well, but when you are a victim, you know how bad it is, and the number of victims is increasing because of the experimentation. If you agree with what I say, and I don't see why you shouldn't, because a ghost loan can trouble you at any time, then share this video, join in the effort that we are making at Moneylife Foundation to get the RBI and to get fintech companies to ensure that we have power over our credit report and we are not harassed because of someone else's mistake or someone else trying to grow their business. If you like again what I'm saying, subscribe and share this video. Thank you.